In the month of November, we had some real volatility. I think this was a great month for everyone to have paid attention and gone and thought, how do I feel about my investments right now? Because we had some pretty significant, drastic moves, both to the downside and the upside. And it's amazing that while we were down maybe 3.5%, 4% across S&P 500, NASDAQ, whatever it might be, that we ended up about flat on the month. Now let's unbox this. So I would say there are two main, things in the news that caused the drop. Number one would be less cuts or lack of a interest rate cut in December, and number two is the prolonged government shutdown. Now, both those things, are more or less unplanned. The market does not like things that are not planned, so it has some volatility. Now, those are what's in the news. I don't think too many people. Now, obviously, if you work for the government, it was a very unfortunate time, or rely upon government subsidies. Very unfortunate time. But as far as the overall market goes, I don't think there was overall too much concern, and yet that was the news story. Now, here is what I think we need to be mindful of, is the fact that we have a year where global markets are up, gold and silver are up, crypto, until this past month, was up. Most large, mid, small cap is up. A lot of things are seeing green. And we have seen significant upside in many assets over the last 3 years. So where we're at is a place where, for those who have been invested, are sitting in a pretty good spot. And in a way to preserve their gains, those investors can also get spooked, right? Especially if they're in individual stocks, they're not in indexes, they're not in active funds. They might want to take their gains, especially your Nvidias, your Palantirs, if you saw a run up in Robinhood or in Google or whatever it might be in the short term, you want to lock in those gains. And that's, a relatively smart thing to do. But the thing about November was there was a lot of fear. And so the fear in those people who have made some money, right, and they move out, and that stokes some fear across the board. So that's where I put out the video on momentum. I'm going to include it in the email message that will coincide this, just in case you didn't see it. I still think that is the main threat right now, is not is not the news per se, but is the momentum of the news. So if there's a couple of bad news stories and enough people want to trim their gains, or enough people say, get spooked by that, that will see a significant downside. And that is, at this point, the main threat. Now, the most important thing to keep in mind is that we're long-term investors, okay? So if we have our individual holdings, or our crypto or gold or something has seen significant gain, it's a conversation on whether to trim those. Again, as we've talked in many of the months prior, maybe we rebalance. But the thing is, we are to and through, okay? And as though the market drops, as our individual stocks, as our whatever we might own drops, we are long-term believers in those assets. And that's the biggest thing that our firm can convey, is that if we have drops in those are better buying opportunities. More likely than not, they're not things to be concerned of, and certainly that's not the time to make the adjustment. So as far as the assets themselves, we want to see that through. Now, one of the biggest thing, and why I appreciate when my clients are paying attention to these time, and I'm receiving emails or phone calls and just asking, hey, what's going on? Great educational standpoint, because those are the times where we figure out, are we taking the proper risk? Okay, so this was a short period with 3 to 4% drop, and we need to be mindful of where our headspace is at with that. Again, not the time to make the adjustment per se, but we need to know how we're feeling about our assets. We want you to have confidence in what you are invested in. These are your assets, and we are here to advise you to them. So, if a 3 to 4% drop causes a little bit too much stress for you, great, let's make an adjustment. But one, let's make it at the right time. And two, let's make sure we talk pros and cons of what paring down our risk might look like. Or where should we be looking at instead of the volatility? So a lot of questions, a lot of conversations to be had with that. Again, this was a phenomenal month for you to be paying attention to what is going on within your portfolio. Now we're back up. Now as we look at December and on, our advice stays the same. We think that there's enough within the system that will continue the trudge higher. Right now, we do think that there is a bit of an opportunity in across the crypto landscape. So some of the leveraged ETFs, so the biggest would be known as Strategy, formerly known as MicroStrategy, which was leveraged Bitcoin. So that means they took out loans to buy more Bitcoin sooner than later. Okay. Well, when those loans come, because of the drop in prices or a lack of significant growth, they are forced to sell those in order to pay back the loans. So a lot of those ETFs, a lot of those groups and funds are selling right now. It's causing downward pressure on Bitcoin in Ethereum and Solana. And as Bitcoin kind of goes, so does the rest of the crypto world in more drastic swings. So that's what to keep in mind. But again, might be an opportunity for those who have some additional reserves, have some additional cash. As we look further on, we want to make sure that your reserves are steady. Okay, the market is still at significant gains. The volatility, when we see drastic drops and spikes, is it's just happening so much quicker. So we want to make sure that you have that emergency fund. We want to make sure that you have the dry powder, as we talk sometimes, to the side to either take care of you and your family in economic or market downturns, or take advantage of that. We want to be very mindful of what that looks like. We thank you so much for watching this video, and we look forward to seeing you in December.